A mixed performance across your businesses, but you single out securities as the main drag on earnings, and it looks like volumes very much under pressure at this point.
Yes, that's correct. I have indicated at the end of last year that we had a very good run in security for the past few years, even through the crisis. We've grown at about 25% per annum compound, and it's just a matter of time before we are going to see some correction. It's probably happening. It happened before in our securities business, and I'm not concerned about turning this corner around as well.
Do you see this as a correction or perhaps a structural shift in the business?
Probably a bit of both. The business has changed a lot in the last 10, 15 years. The business probably will change. There's a lot of regulatory and technical structure shifting in the industry. We just have to adjust to that. Definitely on equity derivative volumes have gone down. But as I said before, we have seen this kind of things before. We are looking to adjust ourselves towards that. We are going to look to expand our distribution channel, possibly offshore in our securities. We got to a stage that our securities has kind of become too big to remain small, and that correction will allow us to take ourselves to the next level in our securities business.
How do you take yourself to the next level in that securities business? How do you build it, and what sort of tools do you need for that?
You need to reinvent yourself. I don't have a textbook that tells me exactly what to do every time margins shrink, competition increases, or market or competition comes from other areas. Innovation is usually what we're good at. It does take time. You can't sort of shift yourself right or left immediately, but we're already taking steps to reinvent ourselves in securities. If you notice, actually costs are down in securities, so we're being cautious while we're looking for other avenues. Probably distribution and new products is where that's the way we're gonna shift ourselves or turn the corner in securities in the next year or two.
Let's talk about one of the areas of the business that did do particularly well over the period, asset and wealth management, and particularly your unit trust growth, 43% growth in assets under management in unit trusts to almost 6 billion rand. Are you seeing strong inflows of new funds into your unit trusts?
Yes, definitely. If you remember, about 4 years ago, or just over 4 years ago, we had no unit trust, and after the African Harvest acquisition, we ended up with a Menko and 80 million rand. We probably just about to cross the 6 billion rand. It's all in-house funds. The performance has been very strong. It is becoming a significant growth vectors in Cadiz. I think the branding initiative that we started beginning of the year, and we just came out to the market now with another branding push, propagate our brand around there. And yeah, I mean, there's no reason why we shouldn't get to the 20, 30 billion rand there in time, but there's no reason why we shouldn't. We've got everything that required to get there.
How about the performance of those unit trusts? Because I see a couple of them, like your Absolute Yield Fund, your Money Market Fund. Those have come out strongly in a number of market rankings. How about the broader unit trust base? Are they also performing strongly?
Yeah, you forgot to mention our Equity Ladder Fund, who is also been performing very well in the long term. The equity-related funds obviously slightly more volatile than the Absolute Return Fund. But if I look at all of these funds are in the top, or in the Premier League of unit trust in South Africa. Some of them are the top in their category completely, and some of them are slightly below that. But all of our unit trusts are performing very well, and yeah, I'm very excited about that.
Ram, you did caution though that assets under management could come under pressure for the full year due to one of the mandates which is maturing, but it's also a very low yielding mandate, isn't it? So it shouldn't really affect profitability of the unit.
Yeah, look, it's one of the legacy assets that we had even before African Harvest acquisition. It is a low yielding, so it unfortunately it's kind of shadows the fact that There has some very good work that's been done in the asset management in terms of getting new quality mandates. The whole restructure of that actually going to have a positive impact on the profitability of the asset management. Although we're going to look like less asset under management, the yield is going to increase and the profitability is increasing. So it is a good shift for us at the end of the day.
Talk to us about your corporate advisory work. You did point out in the commentary that most of the work in the past period was really focused on the resources sector. Is that what it's looking like going forward as well? What sort of mandates do you have lined up?
The mandates are still very much in the resources area. The guys are doing very good work there. The nature of the business is very bulky. We're involved in very bulky, large transactions. And the outcome can sometimes be binary, like we've seen with HSBC and Nedbank, although we're not involved there. So the pipeline, the most important thing is, first of all, that we've got great mandates and pipeline, and the potential is great. The guys sometimes can come up within 1 month and do the annual budget, and sometimes they can go for 6 months and work hard with very little benefit. That's the nature of the beast in this kind of business. But I think the guys are very well positioned. The JV with the Indian and the Chinese market starting to bring interesting deals into the pipeline. I don't want to forecast, as I said, because of the binary nature of that success, but I think the business is very well positioned to unlock some value.
Ram, what's the second half of the year looking like? Are you starting to see volumes picking up in the securities business? What would you predict for the full year?
Second half, probably for securities, is going to be similar. We are working in securities. We are going to turn around securities. It's not probably going to happen in the short term, probably more in the medium term. Asset management and the wealth area, I'm comfortable. I think if you look at our result, 6 months rolling in the past couple of years, the second half is usually better than the second half. The second half is usually better than the first half. Also, there is a cyclical skew where most of our benefits from performance fee come in the second half. So the year itself probably going to look still difficult, but the second half definitely going to be better than the first half.